Hey guys, Credible Crypto here. I have for you guys today an exciting video. This is something that I'm super excited about doing research leading up to making this video, and I was just so pumped. I think you guys are really going to enjoy this. This video is going to be about Curve and Convex, two, I would say, sister coins that kind of work together in the space, and something that I was turned on to quite recently, about 2 months ago in August, when I first tweeted about entering the coin. It was trading at about $5. Currently trades at about 23 after hitting a high of about $33. Convex Finance, guys, the fundamentals behind this coin are absolutely incredible. I haven't been this excited about a coin since discovering H-bar at 3 cents. And I was turned on to this coin by a member in my Discord. I'm going to give him credit for opening my eyes to Curve and Convex. So shout out to him. I will share his Twitter or something in the link so that you guys can check his stuff out. He is the one who turned me on to this, and he's very knowledgeable about both Convex and Curve as well. So I'd like to thank him for that. Guys, anyways, this video I'm going to be talking about the fundamental bullish thesis of Curve and Convex, two coins that I now hold very heavily. Started off with Convex and then recently discovered Curve at around the $3 range and jumped into that as well. They now make up two of the largest holdings in my portfolio. And I would say that one of the biggest reasons that I think Convex CVX is still relatively small, it has less than 10,000 holders, guys. For a coin of this strength and magnitude, that's quite unheard of. But I think the reason that there are so few holders of this coin at this time and it's relatively undiscovered is because the idea behind it and the fundamental argument for why people are bullish on it is a little bit complicated. It's a little bit complex. And if someone new in the space, trying to understand why Convex is bullish and why it deserves a price that's much higher than it is now, is something that can be quite daunting to try and wrap your head around that. For me, myself, it took a few days to some weeks to thoroughly understand what was going on here. And so this video is to kind of explain that to you guys, if possible, in a way that I hope everyone can understand. I'm going to be oversimplifying things maybe a little bit. We're going to go through a couple of articles that I think broke it down very, very well. I'm going to try and make this as simple as possible. Again, it is quite a complex idea between Curve and Convex, but hopefully if I explain this to you guys the way that I'm thinking about it in my head, it'll make sense to you. And you can see why I'm so bullish on both these coins. Furthermore, guys, at the end of this video, I'll be covering technical analysis on both the coins. They are approaching optimal places to enter, which is why I think that the timing of this video is pretty good. I always say do your own research before buying any coin. Of course, not financial advice, but I think they're approaching points where it makes sense to enter or establish a new position. And so this video on the fundamentals hopefully will give you guys more information that you can then follow up with before making that purchase. So we're going to jump right into it, guys. I'm going to try and avoid editing like the last video, get this out as soon as I can. So excuse me if I go on some rants or something like that throughout the video. I'm going to try and do my best to keep it clear. Let's go ahead and start, guys. We'll start off with the idea behind Curve. So Curve DAO token, which is the first of the two tokens that we're going to talk about. Let's talk about Curve. Let's see if I can make you guys understand what Curve is and why it's valuable, and then we'll go on from there into Convex. This was an article by Edward Oosterbaan. Apologize if I'm pronouncing that name incorrectly, but Edward is an editor at CoinDesk Insight. He's a researcher, and I found that his article here did a great job of explaining where Curve's yields come from and why it's valuable, right? So let's talk about Curve first. I'm going to go through his article and kind of break down everything that he's saying. And hopefully we can make you guys understand what's so big about the first coin, Curve. So we're going to jump right into it, all right? So Curve is a DeFi protocol, okay? And these DeFi protocols, like Curve, created a market of peer-to-peer lending, trading, and insurance protocols that took out the middlemen like banks or exchanges or insurance companies and allowed smaller users to transact and therefore earn revenue, okay? Uniswap and Curve are similar protocols, okay? Uniswap, SushiSwap, these are all DEXs. Curve, by its very nature, is a DEX, a decentralized exchange that allows users to swap between various tokens, okay? Some of the most prominent protocols have given token holders a share in the responsibility to control the future plans, upgrades, and offerings of the project itself. This is what a governance token is. Curve DAO and its native token CRV are examples of that governance model, with a token playing a vital role in the protocol and the broader DeFi universe, meaning that various DeFi protocols have a governance token, and they give token holders a share in controlling the direction of the protocol. This is what a DAO is. A decentralized autonomous organization. Basically, the holders of the token are almost akin to shareholders that can decide where the DAO is directed, or where its attention is focused on, and the direction of the DAO. And so these are called governance tokens, essentially allowing holders to govern the direction of these protocols. So Curve, CRV, is the governance token of the DAO, of the Curve DAO. Okay. So introduction to Curve DAO. Recent shifts in tokenomics have led to its native token CRV to become net deflationary. What this means is that Curve DAO, just like many other, or CRV, just like many other tokens in the space, in fact, most tokens in this space, is an inflationary token. By its very nature, over time, more Curve tokens are introduced into the circulating supply, and that is how the Curve supply, total supply, goes up. There is a cap to the max amount of CRV that will ever exist at around 3.3 billion or 3.03 billion, I believe. And every day, more CRV is introduced into the supply. However, lately, CRV has become net deflationary. We'll talk about this a little bit further in the article, but lately, the amount of emissions is becoming deflationary. Again, we'll talk about that a little bit later. So what does Curve do, and how does Curve do it? So Curve is a decentralized exchange, like I said, like SushiSwap or like Uniswap. However, Curve is focused on stablecoin swaps, okay? Whereas SushiSwap and Uniswap are focused on swapping between more volatile assets. Curve is focused on swapping between stablecoins, okay? So stablecoins, again, are coins that trade at a 1-to-1 ratio, like USDC, USDT, other stablecoins that are pegged to the US dollar. That's what Curve is focused on swapping between, as opposed to more volatile assets. The stablecoin pools have gained traction, offering high liquidity and low fees because Curve uses its native token, CRV, to reward liquidity providers instead of higher swap fees. Below, you can see the results of swapping $75 million from USDC to USDT on Curve, Sushi, and Uniswap. So what's it's saying here is that rather than charging high swap fees to make transactions, Curve uses CRV emissions to reward liquidity providers instead of rewarding them with higher swap fees. So, for example, when you do a swap on Uniswap, they charge a fee. I think it's like 3% or something, right? This fee goes to reward the liquidity providers that are providing liquidity on the protocol, allowing you to make that swap, okay? The more liquidity, the less slippage you have, and the better exchange rate you can get. And users have to deposit their funds into these pools to allow people to swap. When they deposit their funds into these pools, they get rewarded with a portion of the fees that are collected by these protocols. In this case, CRV has a very low fee, 0.04%, versus something like SushiSwap that has a higher fee. So how do they compensate for the difference in fees? If I'm depositing my funds into Curve, I want to get paid a portion of those fees. The higher those fees are, the more money I make, and the more incentivized I am to add my liquidity to the protocol. Again, the more liquidity, the less friction between swaps, and the better exchange rate users can get. So liquidity is very important, right? And I get that. And as a liquidity provider, I earn more the more fees that the protocol makes because they give me a share of those fees. Now Curve charges very low fees. So now Curve says, hey, we charge very low fees, so you're not going to make that much from the fee share revenue because there isn't much. Instead, we're going to reward you with some of our own CRV tokens that are being released into supply. So that incentivizes stakers or liquidity providers to add funds to the protocol, making the protocol more liquid, allowing better swaps, and making it a better user experience for people that are swapping. So here's an example of swapping $75 million from USDC to USDT on Curve, Sushi, and Uniswap, okay? And we can see here that swapping 75 million USDC to USDT on Curve, okay, gives you an exchange rate of 0.9995, almost 1-to-1, okay? On SushiSwap, gives you an exchange rate of like 0.5. Terrible. I don't think this is the case anymore, but back then when this screenshot was taken, it might be actually, if you were to swap 75 million USDC into USDT, you would get back half, essentially, because there's not enough liquidity in SushiSwap to allow you to make a good swap. So very illiquid on SushiSwap, okay? On Uniswap, if you were to do the same, you'd get back 74.7 million, okay? And that's an exchange rate of 0.997. That's a lot better than SushiSwap. But again, Curve is the best at 0.9995 versus 0.9975, okay? And when we're talking about millions of dollars, this makes a significant difference. That's a $300,000 loss you'd be taking using Uniswap over Curve. What this means is that bigger players, larger players with lots of capital will always choose Curve to swap their tokens because they get a better exchange rate. And therefore, Curve is the dominant DEX for stablecoin swaps because they have the best liquidity. All right, let's continue on. Let's talk about Curve tokenomics. So Curve holders may stake their tokens to the platform and lock them in fixed periods of between 1 week and 4 years to decide their voting weight. We talked earlier about how holding CRV tokens gives holders a right to the governance, right? Or the voting power of where the DAO goes or what the DAO does. To get this voting power, holders need to stake their CRV tokens, okay? For periods between 1 week and 4 years to decide their voting weight. The longer that you stake, the more voting power that token gets you. For example, if you were to stake one Curve token for 1 week, you might get, this is theoretic and overly simplified, but you might get 2 points of voting power. If you were to stake your CRV for 4 years, that one CRV token gives you 10 points of voting power, okay? So the longer you stake it, the more voting power each CRV gets. So when you stake these tokens and you lock them in, you are issued then vCRV tokens. And vCRV tokens just stands for vote locked CRV, I guess like vote earning CRV or something like that. But essentially a vCRV token is a locked version of the CRV token, and this token has voting power. And this is why you're staking it, to get that voting power, okay? Those that have these tokens now have the voting power to determine how the CRV emissions are distributed across Curve pools. Meaning, if you now have voting power, you can say, hey, I vote that 30% of CRV emissions are going to go to this particular pool or this particular protocol. So as a vote holder, as a CRV token holder who's locked their CRV token, you now have voting power to influence where the revenue that is generated from the Curve DAO, from the DEX, goes, okay? As a holder, I can vote to decide that I want this revenue to go to this, or I want this revenue to go to that. So voting power as a Curve holder is very, very significant. You're essentially controlling where the profits of this protocol are directed, okay? Subsequently, a system for bribing vCRV holders to vote in favor of specific gauge weightings has arisen. Projects like Abracadabra pay vCRV holders in their native token for weekly bribes to boost the yield on their decentralized stablecoins, increasing demand for their own project. Meaning, now that these votes are so valuable in determining where these profits are divided up, basically, other projects who rely on these CRV emissions for their projects are now bribing holders of these coins to incentivize them to vote to direct profits to their protocols. This is a little bit confusing. We're going to go into this a little bit more depth in the next article, but I'm going to continue on here. Another benefit to holding locked Curve is that you also get a portion of the protocol's revenue. Okay, that's another benefit. But the big benefit here is the voting power. Focus on the voting power. Okay. It's also important to note that the demand for locking CRV has also increased, turning the asset net deflationary. The CRV that is locked for voting is not considered part of the token supply, as it is non-liquid and the majority is locked for the next 3 to 4 years. We talked about this earlier. I said I'd come back to the deflationary aspect. So what this means is that, again, remember, you can lock your CRV for anywhere from 4 weeks to 4 years, okay? What this is saying is that every day we get a certain amount of CRV entering supply, new CRV entering supply, right? The asset has now become net deflationary because more of that CRV that's entering supply is being locked than is being entered into supply. So for example, let's say today 1,000 coins enters supply from CRV emissions, okay? At the same time today, if 1,000 coins entered supply, 1,200 coins are being locked up for about 4 years, which means that more coins are being locked up than are entering supply, which means that the asset is now net deflationary, okay? Most of these tokens that are locked for the next 3 to 4 years, which means they can't be touched. They cannot be accessed. Therefore, they're not circulating. Therefore, we're seeing deflation across the board. And how many are currently locked? This is huge, guys. Keep this in mind for the future. But 89 to 90% of Curve tokens that exist right now are locked for about 3.7 years. And we can see more information on the Curve dashboard. I'm not going to go to it now, but I've tweeted about this earlier. 89 to 90% of existing CRV tokens have been locked for 3.7 years. No one can touch them. No one can sell them. They're gone for 3.7 years, okay? There is a big supply crunch on CRV tokens, and this is part of the bull case for CRV. Let's continue on. The dynamic capabilities of the CRV token and ecosystem have made the project an attractive building block for several other DeFi projects, namely Yearn and Convex. Both protocols allow users to deposit Curve liquidity positions or CRV into their vaults, which then harvest rewards, both compounding the LP position and reinvesting in CRV to optimize yields. Kind of complicated if you're new to DeFi and all this stuff. Basically what they're saying is that there's a couple protocols, 2 of them, Yearn and Convex, that allow you to deposit your CRV tokens into the protocols, and then they will automatically find the best yield for those tokens and give it back to you, taking out all the complexities of you having to deposit your Curve tokens and generate yield yourself. These 2 protocols will do it for you. Okay, that's what they're saying here. Yearn was born out of the DeFi summer and started to quickly pull in large ownership of vCRV, holding nearly 10% of the supply when Convex was launched. In a few months, however, Convex was able to swallow over 35% of the locked CRV supply. The competition for control over Curve's gauge voting and yield boost was dubbed Curve Wars. So these 2 protocols started accumulating lots of vote-locked CRV, because the more that they can accumulate, the more that they can direct the yields, and this is beneficial for their own protocols, right? So Yearn started by accumulating about 10% of CRV, of locked CRV, which is a big chunk, okay? When Convex was launched. In a few months, however, Convex was able to swallow over 35% of the locked CRV supply. The competition for control over Curve's gauge voting and yield boost was dubbed Curve Wars. What's happening here is that Convex was launched, again, just 5 months ago or so, and they quickly started accumulating locked CRV. Again, the more CRV that they accumulate, the more voting power they have, and the more power they have to direct the profits of the Curve DAO. Okay, this competition, Yearn versus Curve, trying to accumulate as much vote-locked CRVs as they can, was dubbed the Curve Wars. Again, whichever protocol controls more V-Curve or locked CRV, they have more control over the direction of the profits of Curve DAO, again, which is the dominant DEX for stablecoin swaps. So there's a few differences. Keep in mind that Convex has a lower fee structure, as it keeps 16% of profits in the form of a performance fee. So this is how Convex earns revenue. It keeps 16% of the profits from the yield generated here as a performance fee. So in return of you giving your locked Curve to Convex, they will optimize and return to you a very high yield that you don't have to worry about trying to figure out yourself. In return, they keep 16% of their profits. That's how they make the revenue, right? Let's continue on. Over time, Yearn and Convex appear to be symbiotic and a net positive for each other. More clear, however, is the positive effect they both have on Curve and CRV. If the demand for stable yields continues to grow, the fight for maximized boosts on Curve has only begun. Yearn and Convex will continue to purchase CRV in an attempt to keep up with their increasing TVL and to offer the highest yield possible. This is the key, okay? As long as demand for stable yields continues to grow, as long as people like me want to earn a stable yield without having to worry about the complexities of everything that is DeFi, and as long as I want to keep earning those yields and keep using protocols like Yearn that are yield optimizers, these protocols have an incentive to continue to purchase CRV in an attempt to gain the most voting power, again, in an attempt to redirect the profits of Curve DAO to their respective protocols and to their respective users. The more CRV I can gain, the more power I have over the profits, and the more I can direct those profits back to my users of my protocol, earning them a higher yield and making my protocol more successful. Okay, let's continue. Curve and its liquidity, right here, over the past 6 months, Curve has made 34.1 million in swap fees, even though it has 16.5 billion in TVL on Ethereum's network and has kept its trading volume consistently high. Curve and its liquidity providers make 40 cents on every $1,000 in trading volume, compared with another popular decentralized exchange, Sushi, which makes $3 on every $1,000 in trading volume for its liquidity providers. Again, we talked about how Sushi charges much higher fees for swaps, okay, and that's again to incentivize liquidity providers. Liquidity providers get a share of these fees, okay, so Sushi charges a lot more, which makes the swaps more expensive, but that gives more yield or gives more profit to the liquidity providers. Oftentimes, liquidity would migrate to exchanges with higher fee brackets for higher returns, meaning, hey, if I can make a chunk of this $3 versus a chunk of this 40 cents, I probably want to go for the chunk of the $3. So I'm going to provide my liquidity to Sushi Swap because, hey, I get a higher share of the profits. Okay, to combat this, Curve subsidizes liquidity with the CRV token, right? So again, we talked about this. To kind of mitigate the lower fee revenue that liquidity providers get on Curve, they subsidize this by giving Curve liquidity providers their own CRV token that is being emitted over time, right? And that makes up for the difference between the fees that they would be yielding. This keeps yield high enough for liquidity providers to stay in its pools. This means liquidity providers are like, okay, I get that I'm making less revenue because on the fees, but you're giving me CRV, which is worth quite a bit. And now it makes sense for me to keep providing liquidity on Curve rather than on SushiSwap. And that's how Curve maintains liquidity for its providers to stay in its pools, okay? Curve now is almost 18.8 billion TVL across 7 different ecosystems. So Curve originally started on Ethereum, and now they've migrated to 7 or 6 other networks. I think Avalanche is one. Off the top of my head, I can't remember the rest. I don't want to misspeak. But there are Curve is now working on various networks, making it the second largest decentralized application or dApp behind Aave, and giving the project 11.4% of Ethereum's overall DeFi TVL. Okay, Curve, again, making it the second largest decentralized application or dApp. And I believe that it might now be the first. Let me check real quick. Yes, so as it stands, Curve is now the first largest DeFi app. It's the biggest app in DeFi. It's the biggest one at 19.71 billion TVL, has now surpassed both of these, Convex leading the way right behind at number 4. We'll get more into that shortly. But again, Curve currently is on Avalanche. It is on Polymatic, I believe. It is on Ethereum, and it's on a few other networks as well. And again, it is the most dominant DeFi application in the space right now. Okay, we'll get back to this. We'll talk a little bit more about it a little bit later in the video, but just wanted to show you guys that. Okay. And then finally, DeFi TVL total value locked, hitting all-time highs, most likely signals a growing hunger for yield. Large funds or high net worth individuals will use Curve, Yearn, and Convex for non-volatile yields, making the Curve wars as important as ever. Again, we talked about how Curve is subsidizing the liquidity provider's revenue through emissions of its own token CRV. We can see here the release schedule. These tokens will be continued to be emitted well past 2026, so another 5 years or so. Current emission schedule, again, there's going to be 3.03 billion Curve tokens ever, and you can see that currently we're sitting at this November 2021. We're sitting at just shy of what looks to be about a billion tokens here. Released through this emission schedule, and that will continue on over the next 5 years, and it will decrease as we go on. Let's go back to the article here. Okay, guys, so that is the summary on Curve. I hope that made you guys understand why the protocol is significant, how it generates its revenue and yield, and how the Curve token plays a role in directing where that profit goes and why it is so significant. All right, now we're going to be talking about CVX, and for CVX, this is a great article by Butler Atz on Medium. Give him a follow, guys. Excellent article that talks about the CVX bull case. We covered Curve, okay, and we're gonna this bull case is gonna come around back to Curve. So we're gonna tie these all in together. But let's talk about CVX now. Incredibly great article, guys. I'm going to I'll post a link in the description, and you guys can check it out. After I go over this with you, the same way I did the last one, you guys can read through it on your own. I read it through a few times before I finally grasped the concepts, but hopefully walking through it with you guys will allow it to make sense for you guys. Let's go ahead and walk through Convex or CVX and how this ties in with Curve. Okay. This article will be a deep dive on Convex, and more importantly, the CVX token. It'll go into the utility, fundamental value proposition, and the bull case. In order to fully understand this, one also needs to understand Curve, finance, and the CRV token, which we just talked about. The first section of this article will build that foundation. The second section will explain how Convex works and how that activity drives a fundamental value to Convex and Curve. Finally, we'll finish off with the bull case for CVX. So some of this stuff is going to be repeated, but I think that this is going to help drive the idea home. It has some information that wasn't in the last article. So let's take a look. Curve Finance is a automated market maker specifically catered towards creating liquidity pools of like value assets paired against each other. Again, we talked about how it's focused on stable coins. Okay. Now, this is where CRV token comes into play. CRV has a variety of use cases within Curve Finance, but the most important ones are rewarding liquidity providers and creating voting power to determine gauge weights. Gauge weights refer to the percentage of CRV emissions that are awarded to specific liquidity pools. We talked about this in the last article, right? CRV has a variety of use cases, but the most important one is the voting power. Again, if you have the voting power, you determine the gauge weights. Again, the gauge weights refer to the percentage of CRV emissions that are awarded to specific liquidity pools. Voting power means that you control where the CRV emissions go, right? Where the money goes. On a weekly basis, governance participants in Curve Finance are able to vote on these gauge weights every week. If I hold some locked CRV, I can vote on where the money goes, every week, okay? To do so, CRV holders must lock their CRV. We talked about this, up to 4 years. That creates vote locked CRV, and then vote locked CRV determines how much voting power one has. Holding vote locked CRV provides some secondary benefits as well, and this is important, including a right to a portion of the trading fees earned by liquidity providers in Curve, which isn't too much, and a boost to the CRV rewards they receive if they're providing liquidity to pools themselves. So these are the two things that holding vote locked CRV also provides, right? Number one is the vote power. That's the most important, okay? Number two is a right to a portion of the trading fees. And number three is that you're able to boost the CRV rewards if you're providing liquidity to these pools yourselves. 3 benefits: voting power, portion trading fees, boosts. In the case of DeFi protocols, they don't care much about the trading fees that are earned, and they don't care much about the boosting. They care primarily about the voting power, because again, that determines how much money or how much CRV emissions they can direct back towards their own protocols, right? So V-curve voting power is extremely important for keeping them competitive and attracting liquidity providers. How do I ensure that I can provide a competitive yield to liquidity providers, right? Number one, I can offer up emissions of my own token. So let's say I'm credible token, right? And I need to have liquid pools for other users to swap in and out of my token, because liquidity is so important for the success of my token. And let's say I want to incentivize that. Well, I can say, hey, if you provide liquidity in the credible pool / USDT pool, I will reward you with credible tokens. Okay, I will reward you with tokens of my own protocol. Okay, and you can sell those tokens in the market and generate yield. That's great. Okay, the problem with this is the more tokens that I release of my own protocol, the more I'm diluting my own protocol supply, and the more likely I am to create sell pressure for my protocol, as you will then sell those tokens in the market. And so credible crypto token will have lots of sell pressure. The higher that I increase the yields of my own token, and it will dilute it and increase the inflation, which leads to whatever hyperinflation or whatever you want to call it, meaning I need to find a way to incentivize these yields without having to give up a ton of my own token. And the way that I do that is by controlling the curve liquidity, or controlling the curve emissions, and directing those to stakers of my protocol, right? So now, instead of just giving you credible tokens, hey, what if I give you credible tokens and I give you CRV tokens, right? That way I can increase the yield, because the CRV tokens are worth something as well, without having to give up more of my own credible tokens and dilute my own supply of my own token. Let's give you CRV tokens instead. Well, how can I give you CRV tokens? I need to control where the CRV emissions go. If I can control where the CRV emissions go, I can direct the CRV emissions to my pool, and then you as a liquidity provider get a share of credible tokens, and you get a share of curve tokens. And that means the yield goes up, and that incentivizes you to give your liquidity to my protocol. I hope this is all making sense. Let's continue on. Convex Finance, okay, now we're talking about Convex Finance, CVX, is a yield aggregator built on top of Curve that will always net you a higher yield on those liquidity positions than you would get anywhere else. The way they do so is by leveraging large amounts of locked CRV that they own. Again, we talked about this in the last article. Again, Yearn is something similar. Yearn and both Convex Finance as well are yield aggregators, meaning that they will take your locked CRV, put that in the right pools to generate the highest yield, and then pay that back to you and take a little commission out of it for their troubles, right? So that's what Convex Finance is. What Convex is really about, however, is influence. More accurately, control over gauge weights. It's a vehicle designed for mass locked CRV voting power accrual, and the CVX token is the vessel for that voting power. This, guys, is key. Okay, this is key. What Convex really is about influence. Convex, again, what its main point is let's accrue as much voting power as we possibly can by collecting locked CRV, right? So all these individuals all over the world have bought CRV. Now they all have one vote, right? But what's my one vote gonna do? Not very much. However, if some entity was able to control the votes of 10,000 people like me or 1 million people like me, if they were able to direct all our votes in one specific place, that gives them a lot of power, right? So the idea here is that Convex was created to accrue as much voting power as it could, so it can have dominant control of CRV emissions, okay? The CVX token is the Convex token, and the CVX token, again, is a governance token for Convex that gives users the right over Convex, the protocol. Meaning, if Convex accrues all this locked CRV, then those that hold the CRV token have essentially control over that locked CRV. Let's get into how this works by first discussing how Convex gets its hand on so much locked CRV. The cvxCRV token, the primary way that Convex accomplishes its goal is through the creation of another token called cvxCRV. This token is a derivative of CRV, and one cvxCRV should be roughly equivalent in value to one CRV at all times. Basically what it's saying here is that Convex has managed to accrue all this locked CRV by creating another token called cvxCRV, which is a derivative of CRV and is pegged to CRV 1-to-1. So if I hold one cvxCRV, it should have the same value as one CRV token. cvxCRV is created in two ways. The first is that within the platform, users can choose to convert their CRV holdings to CVX to cvxCRV at a 1-to-1 rate and stake that cvxCRV to earn yield. A little typo here. I believe he meant to write cvxCRV right here, not CRV-CVX, I believe. Under the hood, Convex will own the CRV permanently and lock it in curve for the max amount of vCRV voting power. In return, they'll mint users an equivalent amount of cvxCRV. What they're saying here is that you take your CRV tokens that you have, you give them to Convex, you deposit them to Convex, okay? In exchange, Convex gives you a token of cvxCRV. That's 1-to-1, that's pegged to the same value, okay? And then Convex takes those CRVs that you gave them and they lock them themselves. Instead of you locking up your CRV, you give it to Convex, Convex locks the CRV, and now Convex controls the voting power of that CRV. So I've essentially given my voting power to Convex, okay? And then Convex gives you this token, cvxCRV, in lieu of your original CRV token. You stake this token, and then you get rewards, okay? So as you can see, cvxCRV creates an ideal way for Convex to siphon as much locked CRV voting power from CRV holders as possible. The cvxCRV staking mechanism creates a reason for CRV holders to give them their CRV directly, and the minting of cvxCRV allows them to reward an equivalent value of the CRV rewards earned while enabling them to keep that CRV for themselves. So let's go ahead and take a look at how much you can get, how much interest you can earn by giving your CRV to Convex. Okay guys, this is on the Convex Finance website, and we can see here that you can earn 63% APR by basically giving them your CRV in exchange for the cvxCRV, okay? You earn 62.67% interest. Let's go back to the article. And let me explain again what this means, okay? This means that basically what's happening here is you're giving Convex Finance your CRV, they're giving you back cvxCRV. cvxCRV is pegged to the value of CRV, so you're still holding a token that's worth just as much. However, you've essentially given your voting power to Convex, right? And in exchange, they're giving you all the rewards earned from that CRV. They're just taking the voting power. And because they're a yield optimizer, they can give you more rewards than you would earn by staking or locking up the CRV yourself. So, for example, hey, I can lock up my CRV for 4 years and I can earn rewards from that, right? Maybe I own 12%, 30%, I don't know what it is, okay? But the alternative is I can give my CRV to Convex Finance, let them optimize the yield, right? They can get a better yield than I can alone. They'll pay me that yield so I can make more money. And in exchange, I'm basically giving them the voting power that comes with that CRV. So Convex accrues the voting power, which is what they care about. And in return, they give you all the yield that would be generated from that locked CRV, except it's better than what you get on your own. So it benefits me and it benefits them. Through these processes, they can accrue massive amounts of locked CRV, and this enables them to further their endeavors by using their newly accrued CRV to continue to provide max boosted rewards and higher yield for their stakers. This is the first Convex flywheel, and the secret to how they've managed to accrue as much locked CRV as they have. At the time of writing, Convex has accrued roughly 35% of total locked CRV. This is the key. This is the flywheel, okay? This is the loop that keeps going in circles, okay? The positive feedback loop. I give Convex Finance my CRV tokens, they get voting power, they give me back a higher yield. The more CRV that they accrue, the more voting power they accrue. The more voting power they accrue, the more they can control the CRV emissions. The more they control the CRV emissions, the higher the yield they can pay me, someone who has given them the CRV. The higher the yield they pay me, the more I am incentivized to give them more of my CRV. It's a positive feedback loop that continually allows them to accrue more and more CRV and make me more and more money. It works for both of us, and the more CRV they get, the more money they pay me, and the more money they pay me, the more CRV I give them, and the more CRV I give them, the more voting power they get, and then it just goes again and again around in a circle, right? It's a loop. positive feedback. This is called a flywheel. This is the first flywheel. The first reason that this is such a awesome protocol that will continue to grow and to continue to grow in value. Let's continue on. The CVX token. Now we're getting into what is a CVX token. We've talked about Curve, we've talked about cvxCRV. Let's talk about the CVX token. First, let's talk about what CVX is used for. Coffee break. All right. First, let's talk about what CVX is used for. CVX holders can lock their CVX and vote on gauge weights using the underlying vCRV that Convex Finance owns. Remember, if you have given your CRV tokens to Convex Finance now controls the voting, okay? Convex Finance, in exchange, has created a CVX token, which is a governance token for their whole protocol. You control CVX, you essentially are in control of Convex Finance. And again, Convex Finance is now in control of a bunch of voting power, okay? That means that CVX holders now control a bunch of voting power, okay? This is all coming back together. Now, you might be wondering why CVX might be preferable to own over CRV. Both earn fees from the TVL of their respective platforms. Both give exposure to any potential demand that would occur as a result of the desire to accrue vCRV. This is talking about the bull case for, we'll go more into this as well, for CVX. The point being that as a CVX holder, you are earning a portion of the fees from Convex Finance, the platform. Again, remember, they charge that 16% fee. You get a portion of that. And then on top of that, as a CVX holder, because you control locked CRV, because you control the voting power, it also gives you exposure to demand that occurs from those who want to accrue locked CRV. Again, as a CVX holder, you control a share of that. You control a share of that locked CRV, and so anyone who wants locked CRV, they have interest in you as a CVX holder. Okay, let's continue. The CVX token has a max supply of 100 million tokens. The majority goes towards, so these tokens are given out the same way that CRV tokens are given out over the next 5 years. The majority of these emissions go towards rewarding liquidity providers at a specific rate that decreases for every 100k CRV that the platform earns until all CVX are minted. So this is the emission schedule of CVX, guys. And again, remember, there will only ever be 100 million CVX. Currently, we're at 70 million plus, I believe. By the time 100 million CRV is locked in Convex Finance, 80% of all CVX that will ever exist will be on the market, right? So if you want to accumulate CVX, you should be looking to accumulate it now, because there's not much more that's going to be entering the market soon, right? We'll talk more about the technicals and the prices later, but the point is that CVX will rapidly decrease in emissions, especially when we hit the 100 million CRV locked mark, which will occur within 2 months. Within 2 months, 80% of this will be on the market, and the remaining 20% will be dispersed over the next 5+ years. Okay, it's going to take a while for that final 20% to come out. Let's go back to the article. Okay, over time, less CVX enters circulation for every CRV that Convex accrues, that chart that I just showed you guys. And since every CRV that Convex accrues is locked for max locked vote CRV, the quantity of locked vote CRV voting power that one CVX token controls will only increase over time. Let's dive into this a little bit more, okay? Every time Convex accrues CRV and locks it, it creates an equivalent amount of cvxCRV. We talked about this. A 1-to-1 peg, you give them your CRV, they give you the cvxCRV. This means that the quantity of cvxCRV in circulation represents the sum of locked CRV voting power that Convex has accrued at present. Meaning, if there's 10,000 cvxCRV in circulation, it represents 10,000 locked CRV. So 10,000 of this represents 10,000 of this, and it represents the voting power that Convex has accrued, okay? At the time of writing, that number is whatever this is. At present, one CVX controls 4 max locked CRV worth of locked CRV. To make this very simple, guys, if I'm Convex Finance, right, and I control 10,000 CRV coins, okay? If I control 10,000 CRV coins, then whoever controls my CVX tokens controls those 10,000 CRV coins, right? The voting power of them, at least. So if I have 10,000 CVX coins out there, and they control a treasury, essentially, of 10,000 locked CRV coins, then one CVX coin controls one locked CRV coin, right? Very simple. In this case, the amount of CVX in circulation at the time of this article was about 30 million, okay? And the locked amount of CRV was about 120 million. 30 million to 120 million means that for every CVX in circulation, there's 4 locked CRV tokens controlled by Convex. So every person that's holding one CVX essentially, or one locked CVX, essentially controls 4 of these locked CRV tokens, okay? That's assuming here that everyone that owns CVX is voting, and that will pretty much never be the case. Meaning, to vote with CVX, right? Again, to get the voting power, you need to lock it in for at least 16 weeks, okay? And you can do this on the Convex Finance website. This means that to get a share of the voting power that CVX controls, you have to lock your CVX for 4 weeks. Which means you can't access it. So some people are not going to lock it, right? Some people who want to be able to access their CVX tokens at any point in time will not lock their CVX, which means they're not going to get a share of that voting power. Those that do lock it have to lock it for 16 weeks, and now they can control some of that voting power that Convex Finance controls through their control of the locked CRV. What this means in practicality is that the quantity of locked CRV that each CVX controls is probably a lot higher than that four figure. Again, that quantity will only increase over time. Meaning, again, if Convex Finance controls 10,000 locked CRV tokens, okay, and there's 10,000 CVX in existence, but only 5,000 of that CVX is staked, okay, then that 5,000 CVX that is staked controls the full 10,000 locked CRV, meaning that each CVX, rather than controlling one locked CRV, controls 2 locked CRV, right? Each locked CVX now controls 2 locked CRV, because only the locked CVX tokens get voting power, right? Only the locked CVX tokens get control over the locked CRV. So out of 10,000 total CVX tokens, if 5,000 are locked, then each locked CVX token now controls 2 locked CRV, okay? Now let's put ourselves in the shoes of someone that wants to make a purchase to accrue locked CRV voting power. And for reference, guys, remember, we said that currently, at present, one CVX controls 4 locked CRV, but not all that CVX is locked. So based on the amount that's locked and based on the amount of CRV that's locked, we can take a look at how much each locked CVX controls right now. And on this dashboard here, we can see that one locked CVX currently controls around 7 locked CRV, okay? So if you've locked your CVX, you currently have the voting power that controls 7 of these locked CRVs. Again, that voting power, again, is in the control of Curve DAO. That voting power determines where the emissions for Curve go, okay? Back to the article. Okay, putting ourselves in the shoes of someone that wants to make a purchase to accrue this voting power. Remember, this all comes down to people trying to accrue that voting power to control the DAO, to control Curve DAO. Let's look at that now, okay? If one CVX of voting power currently controls 4 tokens, right? And we're going to use this example. Currently controls 7, but let's say it's controlling 4. Then that means that it would cost at least $12 worth of CRV as opposed to $10.65 worth of CVX. So at present, even in the best case, CVX is a much more capital efficient way to accrue voting power and therefore a better buy. I'm going to try and make this more simple with using today's prices, because this article is written with prices at the time, which it's not going to make sense looking at these numbers. So let's talk about it from the chart that I just showed you guys, okay? Around 7 CRV locked per CVX, okay? The price of CVX right now is around $20. The price of CRV right now is just around $4, okay? The price of CRV right now is $4, and each CVX controls 7 of these CRV, then theoretically, 7 times the price of $4 means that each CRV or each CVX controls $28 of CRV, right? That kind of establishes a floor price for CVX, meaning that the value of CVX right now, just based on the value of CRV, should be about 7 times the value of CRV. The value of CRV is $4. The value of CVX then should be worth $28, okay? So if CVX is currently trading below $28, you can get more voting power by buying CVX as opposed to buying CRV. This kind of creates a floor for the price of CVX. If you're going to try and accrue voting power, you can buy CRV, you can buy CVX under $28. Right now, as it stands, CVX is the better buy than CRV. It makes sense to buy CVX over CRV because it's worth $28 worth of CRV, right? And currently CVX trades at $21. You're getting a little bit of a discount on that voting power. Let's go back to the article. Okay, so that means that at present, even today, CVX is a much more capital efficient way to accrue voting power and therefore a better buy. Rather than buying 7 Curve tokens, okay, for $28, I can buy one CVX token for $21, and that CVX token controls just as much voting power as 7 of those CRV tokens that I would have paid $28 for. I can get like a 20 to 30% discount on voting power by buying CVX right now, today, as opposed to CRV. There's also an application called Vodium, which functions similar to Bribe, allowing DeFi protocols to bribe CVX holders for their voting power. Meaning, if I'm a protocol that wants that voting power, I can either go out and buy CVX or CRV myself, or I can bribe, okay, existing CVX holders to vote for my protocol, right? If I own the CVX, I can vote for my own protocol, or I can pay you to vote for my protocol, right? This means that I can pay current CVX holders money to direct their votes to me, right? And so this is where the bribes come in, and this is the bribes that we talk about on CVX. And if you lock your CVX, you get bribes. This is exactly what we're talking about. Remember, if I'm locking my CVX, I have voting power, right? I control CVX voting power because because Convex Finance controls the CRV, and the locked CRV controls the DAO. It's all kind of a chain, right? And so if I'm controlling the CVX tokens, I'm controlling the voting power. If I'm controlling the voting power, then people can pay me to direct my votes into their favor, right? In their favor. So this demonstrates a clear demand at present from DAOs for locked CVX. DAOs want to accumulate this, right? Either through bribes, through bribing people like me who own the CVX, the locked CVX, or through purchasing it directly, right? Any purchases made are done so with the intention of locking that CVX to vote, not speculating on its price. They don't care about the price of CVX. They don't care about the money they can make by the price of CVX going up. They care about the voting power that buying CVX gives them, right? If this trend continues, it will reduce the quantity of CVX in circulation and increase the demand to acquire it, and there will only ever be 100 million CVX in existence. Again, within 2 months, 80% of that 100 million will be out in the open for people to acquire, and there will only ever be 20 million more coming into circulation, okay? Protocols now have an incentive to buy CVX, and we're seeing this happen across the board because it gives them the voting power. It gives them control over that locked CRV at the base level, right? And again, the locked CRV gives them control over Curve DAO. With that being said, will CVX always be a better buy than CRV when it comes to accruing voting power? Theoretically, if the price of CVX rises relative to the price of CRV, there's probably some price at where it makes sense to purchase CRV instead. This is the second flywheel. Remember, the first flywheel was how Convex continually accrues more and more locked CRV, which allows them to pay a higher yield, which makes people like me want to lock more CRV with them. It's a loop, right? This is the second loop, okay? And this is where I've tweeted out, when the price of CVX goes up, it causes the value of CRV to rise, and when the price of CRV goes up, it causes the value of CVX to rise. Think about it back from our example that we just showed. If one CVX currently controls 7 CRV, okay, and the price of CRV is at $4, then one CVX is currently worth, just based on voting power, $28. 7 times the current value of CRV at $4, $28, okay? So I can either buy 7 CRV and pay $28 to get my voting power, or I can buy one CVX for $21 and still get the same voting power as buying 7 CRV, which means today, right now, it makes more sense to buy one CVX as opposed to 7 CRV, okay? Because one CVX cost me $21, it's trading at right now, versus 7 CRV would cost me $28. However, this may change. Meaning, let's say the price of CRV stays at $4 for the next 3 months. However, the price of CVX goes up to $50 over the next 4 months, okay? Now, at a price of $50 for CVX, and let's assume that it's still controlling the same 7 CRV, at a price of $50 for CVX, I control 7 CRV. But CRV is still at $4, we assumed, right? Remember, it's not theoretically, it's still at $4. Meaning, now I can get 7 CRV for $28, or I can buy one CVX that controls 7 CRV for $50. All of a sudden, it makes more sense for me to buy CRV now, okay? And in this way, when the price of CVX goes up, at some point, it's going to make more sense for people to now start buying CRV. And when the price of CRV goes up, right, it increases the value of CVX because CVX controls CRV, okay? Now, let's say the price CVX goes up to $50, price of CRV is still at $4, which means I'd rather buy 7 CRV than 1 CVX. So I start buying CRV. That pushes the price of CRV up, okay? Let's say the price of CRV goes up to $8 because everyone's buying CRV now, okay? Now the price of CVX is still at $50, let's say, for whatever reason. And the price of CRV has gone up to $8 of CRV. CVX still controls 7 CRV, meaning that while one CVX still costs 50 bucks, buying 7 CRV at $8 cost me 56 bucks. Now it makes more sense for me to go back and start buying CRV because I'm getting 7 CVX, I'm getting 7 CRV worth of voting power for $50 by buying a CVX versus paying 58 if I were to buy the equivalent amount of CRV. Now I start buying CVX again. That pushes the CVX price up, right? From 50, it pushes it up higher. And in this way, as long as this number here stays the same or continues to go up, these two will continuously put buy pressure on each other, pushing their prices up one after the other. When it makes more sense to buy CVX, I buy CVX. The rising price of CVX eventually makes it so that it makes more sense to buy CRV. The rising price of CRV eventually makes it so that it makes more sense to buy CVX. And in this way, they keep pushing each other up. They keep pulling each other up higher and higher and higher and higher. This is the second loop, the second positive feedback loop. Okay, we talked about the first earlier. This is the second. And that stays consistent as long as this number goes up. Okay, and this number will go up consistently because, again, the number of CVX entering the market is declining rapidly, right? Every time 100 million CRV are locked, this continues to decline. We looked at that curve, that log curve that shows, or that bell curve that shows that the whatever curve that shows that the amount of CVX entering is being reduced over time, and the amount of CRV that's entering is continuing, right? So as more and more CRV is locked and less CVX is emitted, this number continues to go up, okay? There's only a limited supply of CVX, the emissions decrease, more and more CRV is being locked into convex finance. Therefore, this number, the amount of CRV that each CVX controls, is going to continuously increase. And that will continuously make CVX a better, continuously increase the intrinsic value of each CVX as this number goes up, okay? And again, these two are going to drag each other up in terms of price. Let's go back to the article. Kind of went off a little tangent there. Sorry about that. Let's continue on the article, right? So this is basically saying that there's probably some price where it makes sense to purchase CRV instead. With this scenario in mind, this is the second flywheel created by Convex Finance. CVX and CRV are symbiotic assets. Price appreciation of CVX lends itself to price appreciation of CRV. Price appreciation of CRV lends itself to price appreciation of CVX, that positive feedback loop. Thus, we have our bull case for CVX. Convex continues its path of securing the vast majority of locked CRV voting power, therefore increasing the power per CVX and demand to acquire it. DeFi protocols purchase CVX to be able to be competitive for gauge weights and lock it, taking the CVX out of circulation. The price per CVX rises as a result of the reducing supply and being the optimal way to accrue voting power. If CRV becomes a better buy as a result of CVX increasing in price, then CRV price increases as a response, and as CVX accrues more power per unit and the discrepancy closes, CVX naturally increases again in turn, okay? This is the final conclusion. Everyone wants the voting power from the curve DAO. Convex Finance has found a way through their flywheel of accruing more and more of that voting power. Currently, Convex Finance controls over 50% of that voting power. They've now actually control a majority as of a few days ago, okay? DeFi protocols want that voting power because with that voting power, they can direct CRV emissions to their liquidity providers who are making their protocols liquid. Again, they need liquidity. By controlling this voting power, they get that liquidity, okay? So they have an interest in accruing this voting power. The best way to do that currently is by buying CVX, okay? We talked about how currently CVX controls so much voting power, again, over 50%. So if they buy CVX tokens, they indirectly control the voting power of the V-curve tokens. When they buy CVX tokens, okay, when they buy these CVX tokens to control the voting power, then that increases the price of CVX. When the price of CVX increases to a certain extent, when it passes a certain threshold, that makes it better for these protocols to buy CRV directly, causing the price of CRV to increase. When the price of CRV increases, that causes the price of CVX to increase, and that endless feedback loop. And the only other way that these protocols can accrue voting power, aside from buying CRV or CVX, is by bribing you and me, holders of locked CVX, for our votes. They either buy CRV, they either buy CVX directly and hold it themselves so they control the voting power, or they pay people like me to give them our voting power. And this is where the bribes come in. And let's talk about the bribes because they are insane right now. We're making a lot of money off these bribes. Let's talk about the bribes. Okay, we've had 4 rounds of bribes. The bribes occur every 2 weeks. We've had 4 rounds of these bribes so far. Again, to get these bribes, you lock your CVX on Convex Finance for a minimum of 4 months or 16 weeks, and then you get access to these bribes. Let's take a look at why these bribes make sense, okay? So this is a tweet from Vodium, which is one of the platforms that allow you to delegate your locked CVX, essentially allowing you to give them control to direct your votes in the way that makes you the most bribe money, okay? Frax Finance is one of the protocols that relies on this liquidity for their protocol, and therefore they have an interest in accruing Convex or CRV, and they have an interest in bribing you for your votes. Here are the bribe amounts that they've been paying out for your votes, okay? This was the first round, and they paid out $200,000 in exchange for voting power, okay, to bribe for voting power. Then they paid out $141,000 the next round. Then they paid out $500,000 the next round, and the most recent round they paid out $1 million. Okay, at the most recent round, Frax Finance paid $1 million to voters, to people like me that control, locked CVX, and said, "Hey, we'll pay you up to $1 million to all of you guys combined to vote for us." Okay. In return, we voted for them, okay? We voted for them because they were paying us money, and they accrued $2.4 million worth of CVX from taking those votes and directing the emissions from CRV to their protocol. And they also accrued $1.7 million in CRV, and they accrued 2.4 million in CVX, okay? Meaning they accrued about $4 million in incentives for a cost of 1 million, okay? Let me try and break this down. I'm Frax Finance. I pay you guys $1 million. You give me your voting power. I then take that voting power and use it to direct CRV emissions to my protocol. How much money was I able to direct to my protocol? I was able to direct $4 million. It cost me $1 million to direct $4 million of emissions to my protocol, to my liquidity providers. Those that are providing liquidity for Frax Finance now get $4 million divided amongst them, okay? That previously Frax Finance was not able to give those providers. They're now able to give them $4 million worth of incentives, and it only cost Frax Finance $1 million. They paid $1 million in bribes, and they got $4 million worth of value on that, or an ROI of 318%, okay? This is why Vodium said, Frax Finance showing you how to 4 times your money every 2 weeks. What does that mean? Well, they put in $1 million, they got out $4 million. They just 4x'd their money, right? For their liquidity providers with one simple trick, bribing locked CVX holders. How much did this translate to? How much did this $1 million translate to for people like us who locked our money in CVX? Let's take a look. Okay, so Frax Finance is just one of many protocols that are bribing right now. I think there's about 8 to 10 protocols currently bribing to get this voting power, and you can see how beneficial it was for Frax Finance. Because Convex controls over 50% of the emissions of CRV through their control of the locked CRV, they control about $48 million worth of emissions, okay? $48 million worth of emissions. Those emissions are done in CRV and CVX tokens every 2-week period. In the last bribe epoch, the last bribe round, there was $4 million worth of bribes. 1 million that came from Frax Finance. Sorry about that. 1 million that came from Frax Finance. The other 3 million came from other protocols. $4 million of bribes were paid out to bribe holders for $48 million worth of voting power. Okay, so the rent efficiency is still crazy efficient. Meaning everyone that paid that money in bribes in exchange for $4 million total that was paid, they got $48 million worth of emissions. They got to control where $48 million worth of emissions went. It makes sense for these bribes to increase. Bribes should continue to increase until it no longer pays off to do so. And it will continue to pay off to do so until we get closer to this $48 million. And where are they today? How much did we make off these bribes? Let's take a look. Those who have locked their CVX on ConvexFinance.com and delegated to Vodium can now collect their biweekly bribes. I just claimed mine. 44 cents for every locked CVX, okay? Which comes out to 40% APR at current prices. How do we get the number? Well, we take 44 cents for the bribe round. Bribes are every 2 weeks, okay? 52 weeks in a year, meaning that we get 26 rounds of bribes in a year. 26 rounds of bribes at 44 cents for every locked CVX. You do the math, comes out to about 40% APR at current prices, okay? And what did I just show you guys? Just showed you guys that those bribes at a current APR of 40% can increase 5 to 10 times from current levels, okay? I'm not saying that they will. I don't know the future. I can't see the future, but from a pure mathematics perspective, it makes sense for these bribes to increase as long as the protocols that are doing the bribes get more for their money, right? And if these bribes control 48 million minus fees, et cetera, and currently there's only $4 million, it's only costing $4 million to direct these $48 million worth of funds, then it makes sense that this number should increase over time as more protocols realize they're essentially getting free money. Like I just showed you, Frax Finance turning 1 million into 4 million for their liquidity providers, right? So if the current APR is 40%, and that's only with $4 million US worth of bribes being paid to direct what is essentially $48 million worth of control, then this number should go up. Okay. Currently at 4 million, split amongst all the people that are locking CVX, that is a APR of 40%. If this goes 5x and $20 million worth of bribes are given to locked CVX holders, of course there's other factors. More people will lock their CVX, diluting the amount of funds that each CVX locker gets, but just for simplicity's sake, the current 40% APR can go a lot higher. But even if we double or triple the APR for locked CVX right now, that means an APR of 80 to over 100% annually, right? An APR of 100% on this asset. And remember, this is Convex. We just talked about the bull case for Convex and Curve. Not only are you getting 40+% right now just to lock your Convex, but you're also taking part in the price appreciation of the token, right? So again, remember when I first bought Convex trading at $5, it's trading at $20 now. I've made 4 times my investment, okay? And on top of that, I'm making 40% APR, which is likely to go up to potentially higher than 100% APR. So you're getting both the interest on this asset that's being paid to you every 2 weeks, free money, essentially, okay? Plus you're getting the price appreciation of this asset as well. One key important factor before you guys lock your CVX, it's locked. That means you can't touch it for 4 months. So you are trading off the liquidity of your asset to get these bribes. You can only get bribes if you lock your Convex tokens, and the reason for that is you can only get voting power from the Convex tokens if you lock them, right? But this is huge. This is why I'm so bullish and why I'm loving Convex right now, and I'm loving Curve right now, because they're paying me this beautiful APR every 2 weeks. I'm getting cash flow every 2 weeks. And on top of that, the token's appreciating because it's massively undervalued. And so this is the bull case for Curve and Convex Finance. I've talked to you guys about why Curve and Convex are significant. I've talked to you about why they're valuable and why one pulls up the other. And now I'm showing you guys that they're worth the way that you guys can get passive income from both of them. Again, as a reminder, you can stake your CRV tokens, convert them to cvxCRV, and lock them on Convex Finance for currently 62% APR. And then your CVX tokens you can lock for currently 40% APR plus some additional fees, revenue that you get, so more like 45%. And that number is likely to go up in time, okay? So that is the bull case for Curve and Convex tokens. That pretty much sums it up. I know it's a lot, guys. I know it's a lot to get into, and I have a feeling you're probably going to watch this, and at the end of this, you're probably thinking, how that made a lot of sense, or that didn't make much sense at all. But I assure you guys, if you go through the articles that I shared, it's going to make a lot of sense. Go through them a couple more times, read through them again. I'll post the links in the description of this video. I'm not done with the video. Don't leave yet, guys. I'm going to talk about the technicals. I'm going to talk about the charts. I know a lot of you guys are here for the charts. That is what I focus on. But I had to make this video about the fundamentals. So let's talk about the charts real quick, and then we'll wrap this video up. I know it went fairly long, but hopefully gave you guys an idea of the entire bull thesis on these coins. Let's move into the charts. Okay, guys, so we're going to talk about Convex first in terms of the charts. You'll recall that I made my first buy here at around 550, posted this chart on Twitter when I did it, bought more at 6 and some change, bought more at 7 and some change, bought more at 8 and some change, made a final buy at around $15 and some change. And locked away all my Convex. It's all currently locked. I think it unlocks, again, it's a 4-month lock period. Mine unlocks, I think, December 28th. I plan on holding it into January to avoid, having to pay capital gains tax this year on the gains. I'll pay them on my, gains next year by cashing out if I want to. after December, so send them in January, or I'll relock them. We'll have to see when the time comes. But from a technical perspective, guys, let's take a look. We've done spectacularly well since our entry, but let's go ahead and take a look at why I think right now is a great time to be eyeing up a potential re-entry or establishing a new position into Convex, all right? So this is the chart. These are prior all-time highs. I'm going to go ahead and mark off these key levels. Let's go ahead and drop a little line there. Okay, that is at $20.83. That is upon launch of the token. We spiked up there. We came back down, and we broke through recently. That's prior all-time highs. We broke through, pushed up to $33, and now we're correcting, okay? Normal correction, guys. We rallied from $7 up to $35. That's almost a 5x increase. This type of a correction, completely normal, nothing to be concerned about. Fundamentals are great. This looks great. Let's take a look, okay? My buy zone right now is currently this region right here, okay? I'm gonna go ahead and mark this off. Okay, this is the area of demand that led to this rapid break to the strong break to the upside that broke our all-time highs. I'm gonna ignore this wick because it was caused by a massive rapid market buy. The thing price shot up and wicked all the way back down. We'll ignore that. So imagine that this is the point at which we broke the prior all-time highs aggressively and confirmed our breakout. We traveled up. We're now coming in for what looks like a bullish retest, okay, of the prior all-time highs and the breakout level. So by that logic, any dips into this region here are screaming buys. We're retesting all-time high breakouts, which is a great place to look to get in, right? So any move down to $19 to $20 is a retest of this area of demand and a great time to be buying spot Convex, okay? That's Convex in a glance. We can go up to the higher time frames, and we can see that if we really want to get into it, we have this high time frame level of demand here on the 3-day chart, essentially from $12 down to $18. So any wicks down into this region would be instant buys essentially. But I have a feeling we're probably not going to go there. We're probably going to front run and just end up at these highs. Again, if the markets are very bullish, we tend to front run these high time frame zones with lower time frame zones that act as areas of demand. And I think that that is going to be one. Again, the apex of this consolidation that led to our breakout going to be retested. Okay, best place to buy. If you're lucky, we might get some wicks lower where you guys can potentially scoop up more CVX, but I wouldn't bet on it. Okay, let's now move on. All right, guys, let's take a look at CRV now. This is a chart that I shared some time ago. This was October 22nd, so about a couple of weeks ago on my Twitter, and this is about CRV, and I said that we're up 50% when I first tweeted about CRV. I talked about CRV in August as well, and I picked some up then, but picked it up for different reasons because the chart looked great. Once I figured out about the fundamentals and I learned about the fundamentals behind it, and I picked up even more here. But anyways, this is a chart that I shared, and I basically said once we break this, we're essentially on our way to see another impulse similar to what we saw here. This was 1,000% gain that we saw here, and then we sat for accumulation in 9 months, key area of resistance that we broke down from. So I said once we break this level, we'll likely see another massive expansion move. Let's take a look at where we are now. So we did break that level, beautifully broke through it. We saw a very nice move to the upside, and now we're coming back down. Typically, when we make these major breaks, we come back down for a bullish retest, and then we continue upwards on our way, and what will ultimately be price discovery above $6 to $7. There was a very big wick up here, a very big move up here when the token was initially launched. I'm ignoring that. So in terms of price discovery, for me, price discovery is a break above this weekly area of resistance. Okay, and you can see that, oops, not that. You can see that, I'm gonna go ahead and mark it off here. This level's at about $5.70. You can see that we already wicked up to it on the most recent push to the upside. But once we clear that level, that is essentially price discovery in my opinion. And from there, we should see again, rapid expansion. So what we're seeing now here, I'm gonna go ahead and change this to red to make it more clear that it's resistance. And you can see that we rejected off of it as expected. However, we're now coming back for a bullish retest. You're getting a chance to buy the flip of this high time frame support resistance level that we broke through. And again, I think that downside is very limited from current levels. We can mark off the start of this move up off of these lows essentially, and we broke through, and now we're coming back down for a retest. So essentially anywhere between this area right here and the lower green area is our buy zone. Okay, that's between $3 and $3.80. We can stretch that out to around $4. Between $3 to $4. If you can scoop up any CRV under $4, that is an incredible buy in my opinion. You're getting a chance to buy a flip of this very significant level of resistance that is now support for the next expansion of the upside. Once we break $5 to $6, at that point, I think we'll see rapid expansion. So you're getting a final chance to get on board here. Again, I bought some CRV under $3. I added a lot more around $3. You're getting a chance to buy very close to my entry here under $4. I'm not sure how low we go, so I would be laddering bids essentially from $4 all the way down to $3. You might get lucky with a wick down into this region, but I'm assuming that buyers are going to step in very aggressively here, so I'm not quite sure how low we will go. Anyways, we're approaching that level. You're getting a discount off the local highs from 550. You're getting a really nice discount, about 20 to 30% off. Think of it that way, right? 20, 30% off the local highs. It's a great chance to buy. We just talked about the fundamental case for this coin and why I think that price is going to go much, much higher, but this is going to be the perfect chance to be buying more. As always, there's a chance that this level gets front run, meaning there's a chance that buyers step in because demand is so strong that we don't get a push down to this region. So if you're comfortable, again, not financial advice, but the way that I'd approach this is I'd start dollar cost averaging, meaning buying some and buying more as we fall. If we do fall that way, if we just reverse right now, you're not completely empty-handed. Doing this, again, carries a level of risk. You have to understand that if you decide to do this, price may fall down into this region anyways, and you may be underwater on your holds. You have to be comfortable with that, with this type of an approach. Again, there's no reward without risk, so there is going to be there's going to be risk in this type of a strategy. And you should only do what you're comfortable with. Only invest money that you're willing to lose, of course. And typically, this type of strategy works best for those that understand what they're investing in, okay? If I know the full bullish thesis about CRV and I'm very confident it's going to go a lot higher, then it doesn't bother me if my position is underwater temporarily if we go down. It's not going to bother me. If you haven't listened to the bullish case that was presented earlier during this video, and if you're not confident about the coin, if you don't agree with the bullish thesis, then buying at these levels and then watching price fall down 20 to 30% below your entry is going to make you panic. It's going to make you want to sell at a loss, and that's not what we want. So before you start buying here, do your own research, understand why you're buying this coin, the logic behind it, understand the technicals behind it, and make your decision accordingly, all right? That is the technical analysis behind Curve and Convex. I've talked to you guys about the bullish fundamentals. I've talked to you guys about the technicals. From here, you guys decide what you want to do. Everything I said here was only my opinion, not financial advice. I have very large positions in both, obviously. I've been talking about them for weeks, if not months. And I just wanted to get this out in the open because we're approaching a point where I think a lot of people that weren't able to get in earlier now have the next best opportunity to enter on both Convex and Curve. That's it for this video, guys. If you guys enjoyed it, please like, share, and subscribe to keep me making these videos, and I'll catch you guys